Hello traders, welcome to Market Edge. Ahead of the trade, I'm Owen Larson with Mission Winners, and this week we're staring down a classic summer stall in the market. The S&P and NASDAQ are drifting between key levels, oil's digesting after a monster month, and leadership is shifting under the surface. In times like these, experience and a steady hand can make all the difference. Before we dive into the charts, I want to shine a light on something new and important we've launched, Derailed. 14 reasons traders quit before they win. Most traders never lose for lack of smarts. They get tripped up by mistakes they don't see coming. This series cuts through the noise and exposes the hidden traps that knock traders off course, no matter how much experience you have. Episodes 1, 2, and 3 are already live, covering 6 of the most common derailments, from chasing extended stocks to oversizing positions to selling winners too soon. Episode 4 drops later today, and we'll keep rolling out a new one each day through Thursday. If you're serious about staying in the fight, head over to the Mission Winners YouTube channel and start with Episode 1. We built this series to keep you on track when the market tries to knock you off. Let's talk broad market and sector rotation. This week, we saw a market still stuck in no man's land. The S&P and NASDAQ trading between major moving averages, energy cooling after a wild run, and not much new leadership breaking out. As always, we're watching the weekly and daily charts side by side for the bigger picture and the short-term setups.
You can always see the name up here in the upper left-hand corner. Energy Bull. It's still below the 200-day, okay? Until it gets above the 200-day, I'd kind of leave it alone. It's decent volume on this bar, and that's good. But again, this needs to show more power over the 200-day. Purple line's the 200-day, the green line's the 50-day. That's the ones we want to key on. Let's continue onwards. Here we go. Dow Jones Internet. You can always see the name in the upper left-hand corner. What do you see? Well, it's kind of basing right here. Doesn't look too bad. Internet stocks, maybe look into them. There we go. IBD 50. That one doesn't look too bad at all, does it? In a kind of a sloppy market, it's actually closed up today. And you can see there's clean tops here. And I'll draw this to help you. Right there. Doesn't look too bad. Something to watch. And I do like this. Close near the highs on a pickup in volume. IBD 50. Gold. Gold miners. Was rallied up. Now it's starting to fall on increasing volume. There's no really safe entry here at this point in time. So be careful with gold miners. GLD rallied up. Fell down here on decreasing volume, and I like this support here near the 21-day. This is one you might want to watch, is GLD. Bouncing here, taking out today's highs with volume. We need that. Cybersecurity still basing. There's no clean entry on it at this point in time, but it does tell us something. Cybersecurity doesn't look too bad. It's in a nice uptrend. Looking at some cybersecurity stocks. There you go. Biotechnology below the 200-day. This needs to show some power. I hardly ever buy anything below a falling 200-day. In fact, I can't remember the last time I bought something before a falling 200-day moving average line. There you go. Online retail, you can always see the name right here. And of course, the ticker symbol is there. Doesn't look too bad. Fell on fairly heavy volume here, okay? But there's potential there. What's a big component of this? You know it. It's a little company called Amazon. Software's basing doesn't look too bad. Look at that. Something to maybe look into. Support here on the 21 EMA. Now you can say, well, what about the ETF? Possibly the ETF or software stocks. You can punch up IGV, top 5 holdings, and there's a good place to start. We systematize it. Mission Winners, what to do. IHI, medicine, it's just lower lows and lower highs. This needs to get off the 200-day with volume. Not a lot of power there. Says be a little careful with medical group. Mid-cap still basing nicely, and you can see this 200-day also corresponds with a pretty simple basing line, right? I'll draw this to help you. Right there. What's it need to do? Take out those tops. Mid-cap stocks, something to start watching if you haven't already. ITA, aerospace and defense. Look at that, nice trend up the ADMA. There's a lot of work in that moving average, folks, the ADMA. A lot. Years of research and back testing and study. And what else catches your eyes? Oh, look at the volume pickup here. That's good to see. That's something to take a look at. Right in here, there's some accumulation. ITA, take out the tops right here. Something to watch going forward. Also, what's the group? Aerospace and defense. Clean base right there. Let's continue onwards here. ITB, U.S. home construction. Folks, it's below all the moving averages. Stay away from home builders. That's simple. IVW, S&P 500 growth's hanging in okay. All right. We'd like to see some power off the 200-day. The trend is still up, okay? That tells us something. Growth stocks are still okay to be involved with. Here we go. IWM rallied up to the 200-day and fell right off of it. Needs to see some power and push through the 200-day for small cap stocks. Why do we do this? Tells us something we didn't know 30 seconds ago. Small cap's improving, but it needs to show a little bit more power before we get interested in small cap stocks. IYR, real estate's just basing, needs to push through the 200-day, but doesn't look too bad with that base right there. I'll draw this to help you. There you go, just a simple base. So we can get it right there. Right there. There you go. Just a simple base needs to take this out, which would also correspond with the purple line, which is the 200-day moving average line. The important part is this. It's telling us something really good. Real estate is basing. It doesn't look too bad. What does that mean? Maybe looking at some home building stocks. There you go. Transports, it's below the 200-day. Needs to get some power over the 200-day. Airlines fell below the 200-day. Not a lot of power there. Be careful with airlines. Banking's just basing. Formed a cup and a handle right here. And it needs to take that out. Also, it is below the 200-day moving average line. I'll say it again. You want to dramatically improve your investing results? Focus on stocks that are above the 200-day. Focus on stocks that are within 20% of 52-week highs. That's $1 million statement, folks. It'll change your life. Focus on strength. Don't bottom fish. Insurance just kind of basing right here. I kind of like the volume that came in, but it needs to come across these tops, and I'll draw a line just to show you what I'm talking about. Really needs to start to push through there. This is only one bar. There was some serious selling here and some serious selling right here. So it needs to show some power there with insurance stocks. Let's continue onwards. Regional banking below the 200-day, be a little cautious. MDY is below the 200-day, but it's basing nicely here. And see the volume that came into it on that bar? Something to watch going forward. And what does that say? Maybe the rally's spreading out to mid-cap stocks too. That's powerful information. Oil services. It's below the falling 200-day. Stay away from oil services stocks. Done. Pharmaceuticals fell below the 200-day. Nothing to do with them. Stay away from drugs. NASDAQ 100. That's dad humor for you. NASDAQ 100, just basing right here, needs to take out these tops. By the way, notice this. It lifted up, fell here on a pickup in volume, lifted up on less volume, and then it's been steadily falling 3 days in a row on a slight pickup in volume. It needs to show some strength here. That's the NASDAQ 100, okay? That is a great, great screening tool. How's the big boys doing? Same thing's true with QQQ. Doesn't look too bad. Retail's kind of lagging. Be careful with retailing. Cloud computing, not showing a lot of power. Be careful. Silver ran up and started to fall. Here's the one risk with silver. The ETF, gap, 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 gap down. I mean, it gaps. Oh, look, it's going, and then it gaps down. Oh, it's going, and it gaps down. Silver has a tendency to do that, okay? Be aware of that if you get involved with it. Just a good heads up. Steel rallied up, and it's falling. Look at that. Fell on increasing volume. Be careful with steel stocks. There we go. SMH, semiconductors doesn't look too bad. It's just basing here. There was some distribution right here and some distribution here. Needs to push across these tops, and I'll draw a line out of service to you. Needs to push through here with volume. But the trend is up, right? The trend is up. And it tells you, hey, look into some semiconductor stocks. There you go. Semiconductor, Direxion Semiconductor. It's still below the 200-day. SMH above the 200-day, below the 200-day. It owns stocks that are lagging, okay? But it has improved some off the bottoms. Another semiconductor ETF. There we go. Spiders is just basing, but notice what it did today. It fell on increasing volume. There's clean tops here. We need to see this push through these tops with volume. That would help. SSO, same situation. Solar ETF, look at that gap down on volume. Be careful with solar stocks. Here we go. Small caps lagging, not a lot of power. Be careful. Oh, look at this moving up here. Oil showed some strength back here. Now, you can say that's one ugly bar. Notice it gapped down, it fell, and closed in the top third of its range. On this bar, too, it was down just a little bit. Oil doesn't look too bad. U.S. oil. There you go. You could punch up USO, top 10 holdings or 5 holdings, and you might find something good in there. Aerospace and defense is basing nicely. The support here, that's good to see. What's the negative? There was heavy selling volume on this bar, and there was heavy selling volume on that bar. Something to be aware of. There was some buying in here, but heavy selling 2 different times. That's institutional selling right there, folks. Right there. That ain't mom and pop selling. That's big boys selling. There you go. Biotechnology below the 200-day. Be careful with biotechnology. Home builders lag and leave them alone. Materials, not a lot of power with materials below the 200-day. I'm going to say this again, and I really am serious about this. You will dramatically improve your investing results if you focus on stocks, and that includes ETFs, within 10 to 20% of 52-week highs and above key moving averages. Strength. Focus on strength. Why am I so serious? For those that don't know, for over 10, 15 years, my only source of income supporting a family of 6 was investing profits. That was it. So I had to get this right. That's why I'm so serious with what we do. I'm serious for your money, all right? So what do we have here? XLC Communications just basing. A little bit of selling came into it right here, and a little bit of selling came into it right here. Needs to show some power over 105. Or you can look into communication stocks, same situation. Energy's picked up a little bit, basing right here. Doesn't look too bad. XLE, something to maybe follow going forward. Energy stocks. Financials just basing, not a lot of power. Industrials, doesn't look too bad. Support on the rising 21 EMA. That's the blue moving average. These just show a little bit more power. There you go. XLK now. Do a compare and contrast. That's just kind of going sideways. Yeah, it's kind of downward a little bit, less sideways. Oh, that's near highs. Look at that. Now I'm going to clean this up. I'm going to take this line off, and I'm just going to connect it. Yeah, it's pretty darn close to the same highs. Right there. There you go. Technology. Technology-related stocks. Do we own technology-related stocks? We own a lot of technology-related stocks. A lot. And there's a reason why. It's not that, oh, we forecasted it. The ETF was telling you. The price action of leading technology stocks was telling you, hey, it's okay to buy some. Go back here. Consumer staples. Look at the compare and contrast. Well, this is near highs. Well, this ain't doing nothing. What does that say? Stay away from consumer staples. There you go. Utilities kind of choppy. Be careful with that. Okay? Healthcare. Look at this. What does that say? Stay away from healthcare stocks. That's a very important thing to know. Folks, what I just shared with you, most investors don't even know that. At Mission Winners, we know that. I have to say, how long have I been looking at ETFs to get an overview of the market strength and weakness? Golly, folks, I'm probably close to, there weren't that many ETFs a long time ago. Geez whiz, 18, 20 years? This works. This works. You can use it to your benefit. What does this one say? Stay away from healthcare. Consumer discretionary is just basing, but not showing a lot of power. Needs to come across these tops, and I'll show you what I'm talking about. Just take out these tops here with volume. Doesn't look too bad. There you go. Metals and mining. Notice how this is steadily trending up the moving averages, trending up the 21 EMA, trending up the 80 EMA. Look closely, folks. Support on the 80 EMA. This stock has not closed below the 80 EMA this whole move. Got very close here today, okay? But even that's a decent trend. I'm not saying buy it now, but I'm just pointing that out. Oil and gas trending up. Look at the volume coming into it. That's nice to see. Something to watch going forward. Oil and gas stocks. Retailing, basing, doesn't look too bad. Software, just basing. A little bit of selling coming on here, shows some more power. That would be good.
So The market is taking a pause. Leadership is hard to find, and most indexes are chopping sideways with no clear trend. This is exactly the kind of environment that chews up impatient traders. That's why today's tactical playbook is all about surviving and thriving in no man's land. This is one of those stretches where discipline wins and overtrading costs you. Most traders lose money here, not because they're reckless, but because they can't resist the urge to act when the market isn't offering much. If you find yourself hunting for trades, trying to make something happen when nothing is setting up, it's time to pause. The pros know to wait for alignment, let the chop play out, and only step in when their rules line up. For us, that means focusing on stocks above a rising 21 EMA, 50 SMA, and 200 SMA, because that's where the real strength lives. Skip the maybe trades, skip the bottom fishing. Money is made by buying strength, not guessing when weakness might turn. With options expiration inflating the numbers on Friday, don't get faked out by volume alone. Always dig deeper and look for real confirmation. The truth is, cash is a position. In a choppy sideways market, protecting capital is a win. When clean breakouts and fresh bases start to emerge, you'll be ready, clear, confident, and with all your powder dry. Here's your tactical edge for markets like this. Only trade setups above rising key moving averages. Avoid hope trades, they rarely work. Keep your size small until the trend is back. And remember, the market's job is to wear you out before it pays you out. Stay patient, stay sharp, and keep your edge. Now, with that game plan in mind, let's turn to the max list stocks. If leadership is going to show up, you can bet we'll see it here first. Let's see what's setting up and what's not.
And now we continue onwards with my favorite list of stocks, the max list. I love the max list stocks. Apple's just basing. You can see, well, there was good volume coming into it. Options expiration can do things like that. Be aware of that, okay? Especially triple witching days can really do things like this. But what do you notice? It's below the 50-day. It's below the falling 200-day. That's the purple moving average. There's just not a lot of power there, okay? So move on to better things, greater opportunities. Amazon, we owned Amazon, lifting up through here, and then it started to fall, okay? And what do? We locked the rest of it in, either made money or sold for a very small loss, but did something also very important, lessened and controlled risk, okay? What does it need to do? This needs to push through these lines. Here, I'll do something for you. Needs to push through this line right here with volume. But please note, when it was rallying up here, it was rallying up on steadily decreasing volume, and then it fell on a pickup in volume. There's just not a lot of power. Until it starts pushing through this line, folks, you just got to sit tight and wait. Maybe it's going to do it next week. I don't know, but we don't force buys. We stack the deck in our favor. There's a few patterns, chart patterns, that are consistently reliable for making money, okay? And we have the discipline and the patience to wait for it. Same thing's true with AMZU, leveraged. Continue onward. Alibaba's below all the moving averages. Just stay away from it. There's nothing to do with it. Just like here when it was below the moving averages. Aren't you glad you didn't own it? That's called a haircut. That's called worse than a haircut. That'll leave a mark. There's nothing to do with it. BIDU, same situation, below the 200-day. That's the purple moving average. Just leave it alone. I'm going back here. Now this one's above the 200-day, but well off the highs. Tons of overhead supply. Then we go back to BIDU, right? And now we continue Goldman Sachs. Goldman Sachs looking fine here. Raise this up a little bit. Simple base here, lifting off. It's slow and steady, but we've added to it, and it's working. It's working. Look at it closed up today on a pickup in volume. That's nice to see. Now, a big portion of that's related to options expiration. I just want you to know that. That's important. A lot of people don't know about options expiration. We do. I've been doing this a long time and running money. So anyway, Google started to lift up, dropped here. Nothing to do with it. We just have to wait. We owned this and sold it for an extremely small loss and avoided this. Okay, there we go. This is why we like simple basis. Price is good above the line and bad below. That's simple. Fell on heavy volume until it starts showing some power. Just stay away from Google. That's simple. MasterCard, stay away from it. There's nothing to do with it. Look at telltale signs. Look at where it fell here. Look at the volume pickup on that bar. It was telling you there's a problem. We're going to do a little lesson here for you. Oh, it's just basing low volume here. I'd like to see some more power. Boy, I'm glad we weren't in it. They knocked the tar out of that. Oh, but it did find support on the 50-day, but it closed down on heavy selling volume, the heaviest volume in a couple of months. That's institutional selling, and we don't argue with it. It tells you to not be in it. Oh, look, it lifted up. But notice, it lifted up, but it didn't take out the down bar here and the volume. The buying volume was much less than the selling volume. It didn't buy anything, leave it alone. Now, this is just a quiet inside bar. There's no real volume. There's nothing to do with it yet. It's still cognizant of that selling bar. And then you get this. Look at that. And look at the selling on that bar. Aren't you glad you didn't own it? Yeah. And then you get that. And it just continues on. So what do we do at Mission Winners? And it's no forecasting. We let price action combined with volume action guide our actions. Let's move on. Meta was basing right here. Nice base. We own it from down lower, down here and here. Sold some into strength. Okay, had some sells into strength. And we'll sit tight. Refresh this. We'll sit tight. I'll drop that alert right there. If it keeps dropping, we'll lock in the rest of the profits. But there's a nice base here that we'll watch for. There we go. Just managing them. No day trading. Just basing decisions primarily off daily charts. FBL is 2 times Meta. Nothing really going on with that. Just got to wait on it. Microsoft steadily trending, as you can see. Okay, if you own it, you're in good shape. Just steadily trending. Walking up the 8 EMA. Right there. That's the 8-period exponential moving average. Just to clarify, that's the 21-day exponential, and that's the 8-period exponential. Let's continue onwards. There's nothing really to do with it right now. We need to see a better base. And they did sell it on a heavy volume. But again, part of that is options expiration day on Friday. Okay? Netflix. Note the simple base right here. Look at the volume picking up. 3 buys. This was on the key list right in here. That's bought more here. Sold some into strength. We're in great shape. It's just basing. It's just basing. Let it work. Where's it going to go? I don't know. Oh, there's a maxim on Wall Street. You'll never go broke taking a profit. Folks, that's a lie. If your losses are bigger than your profits, you're going to go broke. You could sell a little bit to lock in profits, but then let the thing work. And then if it bases and finds another entry, you can buy some more shares. We manage it. Manage the stock. Continue onward. NVDA, simple base right there. Look at that. Isn't that a thing of beauty? And then added more. And it's working. We locked some profits in. But again, MAXLIST stock, that's what we're looking at. Simple bases, volume surges, working. NVDL, just basing right there. Needs to show more power. Tesla. We own Tesla back here, sold into strength and got out of it, thank heaven. Now what is it doing? Taking a look at the chart. Well, it's just going sideways. There's some green volume bars in here, but it needs to take out that line, and it needs to do it with volume. And until it does, we just sit tight and wait. Here's a derivative of it, TSLL. This is a way to get, this is expensive, okay? $300. This right here is trading around $13. It's a way to get into it, and it's a mirror. Look at the price action. Just study the chart. Look here, and then you look at TSLL. It's pretty much the same chart, isn't it? I mean, even right here, look, it lifted up a couple of days, 3-4 days, and then fell. 3 or 4 days, and then it fell. It's the same thing. It allows you to get into it, and it's plenty fluid, okay? But remember, wait for the price action backed by volume. Until that happens, we have the discipline to wait. And then we round it out on the MAXLIST with Visa. It's everything. It's everywhere you don't want to be right now. Look at that drop there on selling volume. Okay, that's a big clue right there. Say, hey, if you own it, you should have sold some into strength because it was rallying up on decreasing volume. Does this? You sell the rest, and you don't argue with it. Then you get a couple of quiet inside bars, and then look what it does. The sellers come back again. Watch. This will help you, folks. Watch price and volume. It will help you make better investing decisions. No forecasting. Get in line with what it is. Do we own this? No. Gosh, no. There's no reason to.
That wraps up this week's Market Edge. Thanks for tuning in, and if you haven't checked out the Derailed series yet, now's the time. Those hidden trader mistakes are real, and this series is built to keep you from falling for them. Head over to the Mission Winners YouTube channel, dig into episode 1, and let's keep you on the path to real consistency. If you found value in today's show, subscribe to Mission Winners on YouTube, and as always, master your strategy, trust the process, and maintain your edge.
I am here in the middle of nowhere. There is no there, it is cold there, but I am safe.